welcome. You're watching Business Today Television. I'm Sakshi Batra and this is BTS. This is Behind the Scenes, a show where we share a sneak peek into the latest edition of the Business Today magazine with all our viewers. Joining in on the program with me are my colleague Krishna Gopalan, the executive editor of Business Today magazine. Also joining him is Surabhi, who is the economy editor of the Business Today magazine as well. Warm welcome to both of you and thank you so much for taking the time out for this conversation. This show will truly help you understand what are the key stories, viewers, that you must be really looking forward to in this edition. Now remember, the cover story for this edition is focused on the IT sector and how it is truly dealing with the AI-led disruption. Now remember, IT sector seems to be on a reboot mode. Artificial intelligence has upended the global technology order and therefore Indian IT companies are now facing a stark choice: adapt fast or to fade away. And that's what we are going to be understanding with Krishna. Later on with Surabhi, we will be focusing on the Business Confidence Index. This is a survey that we do with over 500 CEOs and CFOs as well, that actually helps you gauge the mood of the business in India Inc. and the country wide as well for Q2. So that's what Surabhi will be talking about. But let's first start off with the IT sector. So straight away to you, Krishna, detail for us, how has the rise of AI affected IT companies in India? And I think the bigger understanding will be as to, because AI has, from buzzword, it has become an everyday word and everybody is now getting on to tackling it on various ways. So how is the IT sector tackling this monster?
Hi, nice to be here, Sakshi. Easily, I think this has to be the biggest disruption one has seen in the world of technology at the outset. I think we've all seen disruptions at various points in our lives, but I think this disruption, with the level of scale and just time taken to spread, I think that alone stands out. I think what AI a year ago versus AI today are really two different worlds in that sense. I think one must really come to terms with that. Now, speaking of the IT industry, the demand or the pressure comes from various quarters. First, from the clients themselves, because they are being exposed to technology at various levels. Industry 5.0 is a reality. You look at manufacturing, look at banking, financial services. I'm just shooting off a few sectors at random. But the extent to which technology is used today is almost a done deal. Now, the pressure on IT companies is to up the game to make sure they're more relevant to the clients. And that is exactly where the challenge lies. I'm just going to go back in time, look at an issue like Y2K that happened at the turn of the century. The IT industry came to terms with that remarkably well. The story this time is a little different because the entire talent pool or the skill set will have to be upped from the time they pick up graduates of engineering colleges. So, which means the whole course curriculum needs to be relooked at. And because if you're going to be in line with what the global client today wants, what you're doing in the past, frankly, won't work anymore. So that's a fundamental challenge. And IT being all pervasive in that sense means the industry will have to now take a serious decision in terms of how much of money to invest, what kind of people to recruit, and all that is going to cost you money at the end of the day. So the whole bit of balancing the disruption of technology versus your client needs and then coming out to the robust business model, I think makes the issue extremely interesting and complex at the same time.
Absolutely. So Krishna, help us understand what are these IT companies now doing to tackle this disruption? Since you do say that AI is probably forcing Indian IT companies to reimagine themselves, reimagine their business models completely. What are some of the examples there for the big tech giants? How are they tackling this right now?
See, off the block, it's AI. The other elephant in the room really is the global capability centers. So dealing with two monsters at the same time, if I may say so. So they have to put in the money to make sure that they have data centers which can up them in the AI game. You have someone like TCS who's just announced a capex of close to $7 billion to set up the data centers. Then you have larger companies which have set up their GCCs in India, and that number is not small anymore. So you have the likes of JP Morgan who moved a big part of the back office to India. So think of it as what was once a BPO, which really performed the back office functions. So now it's something that's more technical, that's more legal. So all the core functions are now moved to cities like Bangalore and Hyderabad. So IT companies therefore have competition confronting them from various quarters. So there's no option but to invest in AI. And if TCS has set the ball rolling with the big ticket $7 million investment, Wipro announced a $1 billion investment sometime last year. HCL has taken a bit of an asset-light strategy. Infosys just announces AI plans right now. So we're looking at it. The investment is mandatory. There's no getting away from it. The point is how much to put in, because ultimately you're dealing with technology with some level of lack of understanding of surety in terms of how much of time that whole investment payoff is going to take. And that's what makes the issue so complex. So companies putting in the cash or putting the resources is a done deal. The question is to what extent the business model can kind of fit into that.
Absolutely.
The scenario is most important.
Absolutely, and the big investments that you point out that the companies are already starting to incur, the big question will be as to whether this will all translate into the kind of earnings that they are posting. Will there be a massive hit on that account? Will margins get affected? And overall, will there be continued shareholder value, at least in the near to medium term, is what a lot of investors will be clearly watching out for, Krishna. So thanks a lot for all that update. This is clearly one story that everybody from employers to employees to everybody who works in the disruption in the IT space will be watching out for. And now let's shift focus to the Business Confidence Index, as I had marked out for you viewers. This is as is done by the Business Today C4 Business Confidence Survey of over 500 CEOs and CFOs. Every quarter we bring that out for you, that truly assesses the business sentiment in the country. And in Q2, Surabhi has an update as to how the sentiment has, whether it's improved from Q1 and what exactly is in the details. Surabhi.
Yes, so it's been a difficult summer for India Inc., if I can put it like that. Like Krishna spoke about the IT sector, but the mood across the industry seems to be very muted. The BCI climbed up marginally in the second quarter to 50.6 from 50.2 in the first quarter. So there's been some uptick in sentiments, but if you compare it year on year from the second quarter of last fiscal, it was at a 9-year high at that time at 56.7 or so. So the mood is generally subdued, and while GST cuts seem to have lightened the mood coming in the third quarter, but in the second quarter when you talk about it, the US deal and the no deal rather has been a big dampener. 51% of the companies that were surveyed said that the higher US tariffs are a big concern for them, and the growth outlook for them, it's very mixed right now. Most companies are not looking at capital investments or any kind of hiring right now. And sectorally also, if you look, so the services sector remains very, very down, and the index shows a contraction to below 50. And similarly, even for MSMEs, the mood is down and in the red zone or below 50, because most of these are exporting companies, and as we all know, the US is a big export market. So India Inc. is still facing a lot of turmoil and trouble.
Okay. So Surabhi, what's the outlook looking like for H2? Will there be any further uptick that we can expect? Are there enough and more triggers that companies are betting big on sentiment improvement? What have they said on the outlook?
Yes, so definitely when we talk to companies and economists, the expectation is that the third quarter onwards, the mood will improve. There will be higher demand, and a lot of it will be domestic driven. Like we all know, the GST cuts are just coming into play, and the festive season, the wedding season is just underway. So it's expected that the second half of the year and the third quarter definitely will be much better. Whatever data we are seeing, high frequency data, whether it's auto sales in October or the PMI, everything is showing a record high. So the expectation is that the second half would be better. Some economists also expect that the growth forecast, which is currently at about 6.5%, it could go higher. The RBI has already upped its forecast to 6.8%. So we need to see how the GST cuts go through. But having said that, there's also a lot of expectation and hope pinned on the US deal, because that would really lift the mood. Absolutely. And of course, jobs and job creation, good salaries, especially in the urban sector, those will also boost consumption and demand.
Fair point. Well, thank you so much, Surabhi, and thank you so much, Krishna, for giving us all those insights. Definitely makes a case that one must have their copies in their hands as well. Of course, the edition has already hit the stands near you, so please go out there and grab your copies. This is one edition you must definitely have in your reading list this fortnight. Thank you so much for being with us on the program, viewers. Of course, we will wrap up the BTS show right here, but do stay tuned on to Business Today Television. A lot more is coming up on your screens for you to understand from the world of business, finance and investments.
If you like the video, do like, comment, share and subscribe.